All right, today we're talking about a company that is right at the center of this whole AI explosion, CoreWeave. You might not know the name, but they're the ones providing the serious, heavy-duty computing power that giants like OpenAI and Meta absolutely need. And their latest earnings, well, they tell a pretty wild story about insane growth and an even bigger ambition. So let's get into it. So the CEO comes out swinging with this quote. I mean, you hear things like exceptional and new records all the time, right? But the part that really jumps out is almost doubling our revenue backlog. That phrase right there, that tells you something huge is going on. It's not just that business is good, it's that it's speeding up like a rocket. So what's the actual number he's talking about? $55.6 billion. Just let that number sit for a second. And this isn't some pie-in-the-sky valuation. This is their backlog. It's real money from contracts that are already signed. I mean, to give you some perspective, that's more than what a lot of famous tech companies make in an entire year. So this number isn't about what they've done, it's a locked-in preview of what's coming. So what exactly is a revenue backlog? It's a super important number for a business like this. The easiest way to think about it is like a massive pile of pre-orders. These are real, signed contracts for their services that they just haven't delivered yet. So that $55 billion, it's basically a giant guaranteed ILU from the biggest names in AI saying, yep, we're going to need your stuff, and here's the money to prove it. Okay, so the backlog is the future, right? But look at this. This is what's happening right now. Their actual revenue is just exploding. A year ago, they pulled in $584 million in the quarter. This year, over $1.3 billion. That's more than double, a 134% jump. It's insane. The AI wave isn't coming, it's already here, and it is massive. So how do you even get this kind of demand? It's that classic gold rush idea. During a gold rush, the people who got really rich weren't always the ones finding gold. It was the folks selling the picks and shovels. Well, that's CoreWeave. They're not building the next big AI model themselves. Nope, they're selling the essential tools, the superpowered computing that everyone else needs to build theirs. And that is a very, very smart place to be. And this chart, this shows that the business itself is fundamentally really, really healthy. We're looking at something called Adjusted EBITDA. Basically, it's a way to measure how profitable their day-to-day operations are. And look at that. It's more than doubled in a year. What this tells us is that the basic idea, renting out high-powered computers for AI, is incredibly profitable. The core model works. Okay, so let's recap. Record revenue, a crazy backlog, and their core business is printing money. So you'd think their final profit number would be massive, right? They've got to be swimming in cash. Well, this is where the story gets really interesting. And there it is, a surprise twist. After all that good news, they actually posted a net loss of $41 million. I mean, last year at this time, they were basically breaking even. Now, with all this growth, they're losing money? How does that even work? How can you grow that fast and end up in the red? Okay, to figure this out, we have to look at the difference between those two numbers we saw. Remember the first one, Adjusted EBITDA? That showed a big operational profit. And that's because, as you can see here, it leaves out some really big expenses, like interest, taxes, and something called depreciation. And that's the key. The fact that their final number is a loss tells us that those things they're leaving out, they must be absolutely gigantic. That's our clue. So that's the billion-dollar question, right? Or maybe the multi-billion-dollar question. If the business is making so much money from its operations, where is it all going? The answer tells you everything you need to know about their strategy. Here's your answer, $1.9 billion in a single quarter. That's what they spent on something called CapEx, or capital expenditures. And let's be super clear, this isn't money they lost, it's money they spent on purpose to build for the future. So what's CapEx? It's just a fancy term for buying physical stuff. Big, expensive assets. We're talking about building brand new data centers from the ground up and buying just mountains of the latest and greatest chips from NVIDIA. This is how they're going to deliver on that $55 billion backlog. So the main takeaway here is they're not losing money. They're taking every dollar they make and plowing it right back into the business to grow faster and bigger than anyone else. So what do you actually get for nearly $2 billion? Well, you get this, a truly mind-boggling scale. They already have 41 data centers up and running. But look at the power numbers. They're already using almost 600 megawatts, and they have contracts for nearly 3 gigawatts of power. I mean, just to put that in perspective, that's enough juice to power a major city. And all of it is just for running AI. The scale is wow. And this diagram kind of shows you it's not as simple as just buying a bunch of computers and plugging them in. No way. They are building a complete, highly tuned system. Think of it like a purpose-built factory just for AI. Everything from the concrete floor of the data center to the networking to the software. It's all designed for one single purpose: to run huge AI jobs faster and more efficiently than anyone else. All right, so they're spending all this money betting the farm on building this AI-focused cloud. The big question is it working? Are the big customers actually showing up? Oh yeah, they are. And here is your proof. Look at this list. This isn't just any list of customers. This is basically the VIP section of the entire AI industry. You've got Meta, you've got OpenAI, even NASA's on here. These are the biggest and most important players, and they are all lining up to sign massive, multi-billion-dollar deals with CoreWeave. It's a huge vote of confidence. And it's not just that they have a lot of computers, it's that they have the best ones. The absolute cutting-edge stuff. They're consistently the first in line to get NVIDIA's newest, most powerful chips. And for their customers, that's a huge deal. It means they get a performance edge over their competitors. CoreWeave isn't just selling computing power. They're selling access to the most powerful AI tools on Earth, before almost anyone else. And this slide just brings it all home. See the connection. The massive spending on the best tech is directly leading to these huge contracts. A year ago, their backlog was an impressive $15 billion. Today, it's over $55 billion. It's like a flywheel. They spend big on technology, that attracts the biggest customers, who then sign huge deals, which gives them more money to spend on even better technology. It's a really powerful growth loop. And this final quote from the CEO really nails it. They're not trying to be everything to everyone. They have one focus: to be the place for AI. They're trying to become so fundamental, so essential, that the next generation of AI literally can't be built without them. It's an incredibly ambitious goal. So when you boil it all down, the strategy is simple: go big or go home. Spend billions now to build a lead that nobody can ever catch. The growth is absolutely real, the customers are top tier, but the spending is just astronomical. It is a massive all-in bet on the future of AI. The only question is, will it work?